What's going on, guys? Amish here, APJ, owner of Payout Approved. Today we're going to be breaking down the last 20 trades I've taken since last Monday. Today's currently Tuesday, October 14th, I believe. Since last Monday, we've taken 20 trades. 17 of those have been winners, absolute bangers. One was a break-even trade and 2 were stopped out. So that's a 90% win rate taken live every day on stream. Before we get into those setups, look down below in the description. I'm currently offering a 7-day free trial, which means you can start trading live with me tomorrow morning for absolutely free. Get all my resources, look at the blueprint, a 40-page course, chat with other members, discuss things, and of course trade live with me, like I said. Join down below. This is a limited time offer, 7 days free. Now let's get into these setups. All right, guys, so jumping straight into it, like I said, since October the 6th, which was last Monday, up until today, Tuesday, October 14th, a total of 7 trading days. We've taken 20 trades live on stream. 17 have been winners, 2 have been losers, and 1 has been a break-even trade. So that's a 90% win rate, and that's how I've secured 3 rounds of payouts already to start the quarter, right, and start the month. So in the last 2 weeks, 3 rounds of payouts. It's been a great start to the quarter. We're going to jump straight into it, starting up Monday, October 6th. Our first trade was a short. This wasn't the best setup. Price was a little bit choppy, but we had wicked into a premium a couple of times. My first entry was on a 30-second fair value gap right in this range. I sold short, and then I added on a retracement, right, and price rejected this internal sweep. Came up and slightly tapped this 1 minute. My stop was within the 1 minute fair value gap itself, so I took about 12 points of unrealized drawdown, right? My stop was not hit. And then I was targeting these equal lows, very obvious right there on the 1 minute. I had a total of 3 minis on, caught about 25, 28 points. Great start to Monday. Our next trade was a long. This was after low of day sweep, right? Anytime price reacts like this, especially to a major liquidity sweep, in this case low of day, I know that a reversal is likely, or at least a big bounce. Low of day or high of day, right? So we got the 1 minute inversion here. Price closed above. I bought on a retracement, and then I added when price confirmed that this was the direction we were headed. My stop was just below this 1 minute order block, okay? So I wasn't stopped out. It was great. Beautiful distribution to the upside. We had relative highs here on the 1 minute that I targeted, and that's where I got out. Something I do want to get better at is leaving runners. I'll admit, I'm not ashamed to admit it. I don't really leave runners. 20 grand a month without leaving runners, I'm sure I'm leaving some on the table. Maybe I could get to 30 grand a month. So that's something I want to work on, but either way, 13 points of upside there with only about 10 points of risk. So that was our second trade on Monday. We had a 30-second and a 1 minute inversion given here. So price closed above this 1 minute, as you can see. I was already long prior off of a 30-second, but we got that close. Price distributed to the upside, high of day there, relative highs. 1 minute bullish gap was holding. Couldn't ask for anything better. Tuesday, this was a week ago, Tuesday, October 7th. This was a great trade. So we were patient coming into the day. We waited 30 minutes for a setup, and this is what we got. So this was our New York session high. Price drove up, swept that high, came down, inverse not only 1, but 2 bullish 1 minute gaps. So those were our bearish inversions. We sold short on a bit of a retracement. We were targeting these relative lows, and we got that. So 12 points to the downside, nearly 1-to-1 risk to reward. Something I want to touch on, if you guys haven't watched some of my older content, is my stop losses. I always want to have my stop losses being protected by either a fair value gap, an order block, or some sort of displacement candle, high or low. In this case, my stop was at the high of this first 1 minute candle that inversed this gap. So that would have allowed price to, retrace a good amount, and I believe there was a 30-second gap there. Again, it's been a week since I've taken these trades, so forgive me if I'm getting things mixed up, but 1 minute inversion given right after New York high was swept, relative lows. That was great. Our second trade on Tuesday, this was a 2-and-done day, was a 1 minute long. Kind of just the opposite end of the spectrum, right? So we had swept New York high, we got that short, and then we came all the way down, we swept New York low, and we got a long. So this is sort of that seek and destroy price action that ICT mentions. When we're just sweeping liquidity, we're making higher highs or lower lows, and then just reversing. There's opportunity when the range is big enough. So on higher time frames, it is chop, but in this case, this is a good 50-point range. There's plenty of opportunity there. So this is the 1 minute inversion, as you guys see here. With my setups, I'm always looking at draw, delivery, and entry. So my draw can be internal liquidity, it can be a fresh fair value gap, it could be a discount or a premium. My delivery is either a liquidity sweep or a fair value gap reaction. And then my entry, of course, is usually a 1 minute or a 30-second inversion. So here are the deliveries off that New York session low sweep, 1 minute inversion given. Bought this on a slight retracement. I waited for price to tap the edge of this inversion. My stop was at the displacement candle low, as you can see right here. And then I caught this to the upside for just shy of 12 points, 0.9 risk to reward. That's still great for me, right? With a 90% win rate, you can even have a 0.65 risk to reward. Usually I'm a bit higher. I'm usually around 0.75, 0.8. So again, Tuesday was 2 and done last week. Wednesday, we had a short in the morning. Price inverse this 1 minute gap here, as you see. Got the setup there. I was a bit cautious here. We had a volume imbalance, but fortunately, price wicked down into it. It didn't cause too much of an effect. We bounced up into this fresh 1 minute fair value gap. So this orange box is the inversion, the prior bullish gap that was inversed. This gray box that's extended out is the current holding bearish 1 minute. So you see price just tapped that by a tick, came back down. We exited at this 1 minute fair value gap. This was 0.82 risk to reward. So this was great as well. Second trade on Wednesday. This was a 30-second long, so you can't see the gap here. This is a 1 minute chart that I'm showing, but price was in a bullish trend, right? We had established that every time price went up, retraced, it formed a new high, retrace, new high, right? So you see the trend is clearly bullish. So we were respecting bullish PD arrays. In this case, draw was high of day, marked out at 166. My delivery was this fresh 1 minute fair value gap. You see price is stabbing into it. It's holding, we're not closing below it. We got a 30-second inversion here, and we took profit for about 11 points, 0.75 risk reward. My stop in this case would have allowed price to tap this fresh lower 1 minute. Again, going back to those protection mechanisms, right? I want there to be defensive mechanisms before I get stopped out. I really want to be proven wrong. I don't want to have a random stop or a fixed, one-to-one risk reward stop if it doesn't make sense based on the chart. Third and final trade on Wednesday. This was a 3-for-3 day. This was a 1 minute long. Price, we had that bullish trend all morning. Price sold off a little bit, tapped a fresh 1 minute fair value gap here, as you can see. Reacted super bullish, inverse not only one, but two 1 minute fair value gaps. I bought on retracement again within this actual inversion. Stop was at the low of this first displacement candle. 0.86 risk to reward, got out for 9 points. Beautiful. Couldn't ask for anything better. So Wednesday, 3-for-3. Last Thursday, we had a long here that was stopped out. Now, I don't have an issue with being stopped out. Something I really want to reiterate and sort of ingrain, especially in newer traders' mindset, is that there's nothing wrong with a stop out. I have a problem with regretting trades. I don't have a problem with being stopped out. I have a problem with taking a trade I regret. If my model is there, if I have those three confluences, draw, delivery, and entry, and the trade, plays out just how I want it to, and I get the entry I want, I'm going to take that trade every day of the week. If it's a stop out, so be it, right? I don't have a problem with that. What I do have a problem with, like I said, is, maybe I'm a bit too flexible on those confluences. Maybe I didn't get the right entry. Maybe I'm sort of chasing a trade. If that gets stopped out, that just stings a little bit more. And that's when you sort of start to see that emotional trading coming into effect, right? So this was one of those good stop outs. This was a post low of day long. So we had swept low of day here. We reacted. We got a 30-second bullish inversion. I was targeting this fresh upper 1 minute. So that was my upside draw. And I was stopped out completely fine. All good, right? I'm happy to take that trade any day of the week. Second long, we more than made up for that. 1 minute inversion given here. We had just closed at equilibrium. So I did take it on the close. You could have got a better entry than me if you waited for a slight retracement there. 0.8 risk reward, took that to this internal swing high for about 11 points. So I was already break even and a little bit green on the day by then. Third and final trade on Thursday. This was a short. So this is a 30-second chart. That's why it looks a bit different than that 1 minute. But price sold off, inverse the lower 30-second, and we got out at these wicks. A big proponent of my exit strategy is, not even holding to actual highs or lows. I'm usually out a tick or two before to avoid equal highs or equal lows being formed and getting trapped. But if it's a standout wick, like, that I'm not going to scroll to it, but even this wick, for example, when one wick really stands out like that, there's a lot of stops along the way down that wick. So I want to be out really early, either CE or even the rejection block in this case right here. And that's where I got out on this short. So that was great. Great way to end Thursday, 2 for 3. I'll take it. Final day of last week, Friday, I think we went 2 for 2. Oh, excuse me. So this is actually a trade on Thursday. I didn't send it for some reason. I only sent it the next morning, but this was our fourth and final trade on Thursday. So we went 3 for 4. So super green day last Thursday, and then I requested, I think on Friday night. Um, anyway, 16 points to the upside. Bullish 1 minute inversion here, closed above the bearish gap, closed above the volume imbalance. We had equal highs. I love equal highs. I love equal lows as a target. Caught this for just shy of 17 points, 1.14 risk reward. That is fantastic for my system. My stop here was at the low of the displacement candle. Great trade. So that was our fourth trade on Thursday. Coming to Friday, this was our first trade of the day. Bullish trend to start the day. Price retraced just to equilibrium of our New York range. This is why I use fibs, right? Some people use fibs for OTE. Some people use them for, those magic levels. I don't believe in that stuff. It's just not part of my system. If it works for you, great. I just use simple discount and premium, right? Is price above or below 50%? In this case, this was 2-3 minutes into the open. We had formed a low. We formed a high. I marked those levels out. Price had tapped equilibrium and reacted bullishly to this 1 minute gap. So our draw was session high here, right? Our delivery was equilibrium and a 1 minute bullish gap. And then our entry was a 30-second gap. So it's not visible on this 1 minute chart again, but we took that. Stop was at the swing low, got out for 12.25 points, 0.86 risk to reward. Great trade, great way to start the day. Second trade, Friday. This was another long. This, I believe, was also on the 30-second. Caught this after price had come down into this 1 minute fair value gap, and we sold just before this fresh 1 minute bearish gap here. So right here in this sequence, there was a bearish 30-second. Price closed above. That was my initial entry. This did take a little while to play out, but I got the trade regardless, right? So again, this is a little bit lower risk reward, 0.72, but with a 90% win rate, there's no problem with that. Third and final trade on Friday. Price sold off, swept internal, right? Beautiful reaction there. Gave a 1 minute bullish inversion. Took this for about 0.8 risk to reward. Beautiful delivery there, just straight up, virtually no drawdown whatsoever. Targeted this fresh 1 minute gap. As you can see, we were in a discount of our New York range, so everything played out really well there on Friday. So 3 for 3, great Friday. Friday is when we began our 100% win streak. So Thursday we did take that loss, 3 out of 4. Friday was 3 for 3. Monday was 2 for 2, and today was 2 for 2. Today being Tuesday the 14th. So trade 1 on Monday yesterday. So this was our first trade coming into the week. 1 minute long. Stop was perfect on this trade. It was the low of this 1 minute displacement candle. So not this low, but this low right here. This is the candle that gave the inversion, right? We bought on a retracement at the inversion edge. Stop was there. I almost got stopped out, and I was telling you guys on live, if this is a stop out, that's fine. We did everything we could. Yeah, good setup, right? But we didn't get stopped out. So perfect stop placement there. And then got that delivery for 17 points into this fresh 1 minute gap. 0.79 risk to reward, 20 points of risk there. And this is why you want chart-based stops, right? And not just fixed risk to reward stops. You would have gotten stopped out if you were just going for one-to-one. If you don't understand why your stop should be in a certain area of price, you're doing it wrong. So that was our first trade of the week. Second trade yesterday. This was shortly after. This was 9:48 Eastern. We were done yesterday in 17 minutes. It really was great. This was a 30-second long. Price had rallied higher, come down into a discount of this 1 minute leg specifically, respected 2 bullish 1 minute gaps, gave a 30-second inversion, targeted that internal liquidity, 14 or more points. You honestly could have gotten some more there. I took risk off a bit early. Almost no drawdown there again. Now, coming to today, present day, Tuesday, this was our first trade. I was really patient today. We were selling off. Some people caught shorts. Some of my members caught shorts. I said, good for you guys. I'm protecting profits a bit more than usual just with my current account situation. So I was being a bit picky. I could have gotten more, but I have no problem with that. I'm glad you guys got to got to catch some more. So my first trade was, I think, 30 minutes into the day, 24 minutes into the day. We had this 1 minute gap here, right? It looked like price had closed above. It did not. This is not an inversion. This is an edge close. So I didn't go long there. Price instead came back down, bounced out of this bullish 1 minute gap. We were in a discount, as you can see. This is equilibrium. We finally got that close. I bought it, 15 points straight to the upside. Beautiful, beautiful delivery there. My stop was within this 1 minute order block. That was our first trade today. Second and final trade. You can't see it here. There was a 30-second 30-second bullish gap here that became a bearish inversion. Right, my stop here was the mean threshold of this 1 minute order block. Took that to the downside, 1.21 risk to reward. Got out at this 1 minute fair value gap. I didn't hold to the swing low. I just got out at the bullish gap on the 1 minute. So 4 trades currently on the week. All have been winners. It's certainly been a really good week. I'm going to see if I can pull up anything else, or if I'm missing anything. We're on fire right now. Guys, if you want to join the Discord, we're offering a 7-day free trial, absolutely free. You can get full access to the group. You can trade live with me. You can see all my analysis. You can look at the blueprint, which is my 40-page course. But it's been a really good start to the quarter as far as payouts go on my end and for the group. So as you guys can see, this is October 2nd, October 8th, and today, 3 payouts. It's been great. It's been great. So, guys, we're killing it. If you want to join, link is in the description. Come see what we're about. Don't hesitate to ask me questions or my mods. Look at our resources. Experience this method of trading. The reason I scalp like this is because it is the most optimal way to develop consistency, right? It's much easier to have an edge on these lower time frames and be right about just the next 2 minutes than it is, let's say, the next 20 or even 2 hours. So until next time, guys, I'll see you later. We're going to keep killing it. Join us if you haven't already, and I'll see you. Bye-bye.